Hi, I'm John Chaya. I'm the founder of MajorHOPE, a cancer care and survivorship model, and we work with people that are dealing with the crises that come about with cancer, whether it be a survivor, whether it be a patient, whether it be a family member or caregiver, or the professionals that are working with a cancer survivor. We seek to help them be better equipped and educated in understanding how to address the issues based on a cancer survivor's perspective. I myself am a cancer survivor, and my wife and I ran through two of the quick crises that occur, one right after diagnoses, and then the other one that occurred after treatment was over. I know I've been one of the fortunate ones and I'm cancer-free now, but I know many people go through a long journey with cancer, and the two crises I'm talking about are financial and spiritual. Today we're going to be talking about the financial crises of cash management. With me is Jim Lund. He's a senior financial advisor, a certified planner with North Rock Partners, and he's going to share his perspective and his experiences with dealing with people that have cancer and also cash flow issues. Jim, our first question is, how do you manage cash flow while you're going through cancer?
Well, Jake, that's a great question. Now, you ask it as if cash flow planning is only important after care. Cash flow planning is appropriate and important for every single individual at any stage in their life, whether they have cancer, they don't have cancer, whether they're just learned that they've got cancer, they're in the middle of their treatment, or they've now concluded their treatment. Cash is the lifeblood of your financial plan, and you can't. So in essence, you can't live without it. And cash flow planning is pretty important for all individuals to be thinking, how can they maximize the use of their cash? You know, it's really not my job to help them make that money. They're out there earning a living, making money, doing the jobs that they're involved in and so on. My job is, once they've made that money, is to make that money work as hard as possible for them and for it to help them reach the goals that they've got for themselves and for their families. So one of the ways that we do that, I think, is one of the most efficient ways to manage cash flow, in my opinion, is to get it invested as quickly as possible. So I just had this conversation this morning with a prospective client where we were talking about taking their paycheck, wherever that money might come from, whether it's from current employment or it's coming from Social Security Administration or it's coming from a pension plan or wherever that money might be coming from. Wherever the source is, have it be direct deposited into their investment account. And it depends on the investment account, of course, but the account that I'm thinking about, we call it a one account, and the benefit of this account is it has check rating privileges. It's got a savings account attached to it, and it's got investment accounts attached to it. So it's this ability to be able to get that money invested in a higher yielding savings account initially, and then send money to their local bank account, in essence, kind of like the allowance. What are they living from? What do they need to live from? Let me give you an example. Let's say the dollar amount is they're spending $5,000 a month to cover their living needs, whatever that might be. The mortgage is embedded in that. The car payment is embedded in that. Their food bill, their insurance costs, all that stuff is just kind of embedded into that $5,000 per month. And we send that out to their local bank account to be able to pay all those bills on a monthly basis. And then what's left, let's assume that maybe the paycheck was $6,000. So now that $1,000 that's left is already earning some income. At the same time, it's out of sight, out of mind for that individual, and so they're not apt to spend that money like you would if it was sitting in your checking account at the local bank. So I've heard this many times, time and time again, where when people put money into their 401k plan or their retirement plan, they don't feel it as much because it's out of sight, out of mind. It's the same concept. Get the paycheck out of sight, out of mind as quickly as possible. Get it invested in something that's paying some return, unlike most checking accounts around town are paying virtually nothing, either 0.02% or less. So let's get it into something that might be paying, half a point or a full percentage point or even a point and a half. And then when they need the money to be able to pay bills, have that systematically transferred over to that bank account to be able to cover those bills. So once a month, maybe it's $5,000 a month, month after month after month. Now, some people feel a little bit uneasy about that initially, at least, and they feel like, well, am I really in control of my cash flow? You are, because let's say that $5,000 wasn't enough. What if you find out that, oh my gosh, I'm running out of money before the end of the month? Well, let's ratchet that up to or another $500. Maybe it's $5,500 for that month then. We need to figure out how much money you need to live from on a monthly basis. And most people don't like budgets, and they don't take the time to put together budgets. So this is a way for them to back into, what is my budget? What am I spending? What do I need to live from? Yes, we can work on budgets together, but I do find many times people don't want to take the time to go through that exercise. So again, this is a way for us to get at that same number. What is it that I need on a monthly basis to live? Once we've figured that number, once we've gotten to a point where the person's comfortable with what they're receiving from their investment account, then the excess can be invested for other goals. Whether that might be to build their cash reserve higher, or it might be to save for kids' education goal, or toward the financial independence goal. Those are additional questions that we need to answer. But the first thing to figure out is, how can I capture that in the most efficient, the quickest way, get the best rate of return on it, keep that money invested as long as possible, pay bills as late as possible without incurring any penalties and so on, of course. And again, be efficient with your cash flow.
Good words of advice, Jim. Let's change the subject now. Suppose we have the fortunate situation of a person becoming cancer-free. Now they're looking at revisiting their past goals, they're looking at their future goals, they're looking at where they're going to go from here. What advice do you have for this type of an individual?
Well, this is where the fun begins. That's awesome. You now know that you're cancer-free, you've got a long, healthy life ahead of you, and you've got these goals. Now, you've had these goals, chances are, prior to knowing that you had cancer. And now that you've had that experience in your life, I think it gets you to be more serious about what the future holds and what you want to accomplish with the rest of your life. So it's a good opportunity to reset, to think about what is important to you, what's important to your family, and what you want to achieve. Related to financial matters, how can you get to the various goals that you might have, financially speaking? And that takes step one is to define it. Determine what it is that you want. And then, is there a cost to that? And if so, what is that cost? And of course, from a financial planning point of view, I'm thinking, what's the future value or the future cost of that goal? Whether it's education, again, for children, or maybe it's a financial independence goal. Playing out the scenario of what that goal looks like financially then allows you to see where you're short, when you're short, how much you might be short, if you are short, or maybe you've overfunded your retirement plans and you really don't need to be putting so much away toward that particular goal, which would give you the freedom and flexibility to say, okay, I don't need as much toward the retirement goal any longer. I can put that money toward the education goal, or toward the next house goal, or toward whatever those various goals might be. Maybe it's travel, maybe it's buying a boat, buying a different car. Again, my guess is it's maybe all of the above. So with that in mind, we need to hash out the plan. And once you have that then a written plan, that you can say, okay, this is what I need to be putting toward this particular goal. This is what I need to be putting toward this particular goal. These are the resources that I have. How do I make sure that I use those resources to my fullest advantage, your fullest advantage, to achieve those particular goals? That's the art. It's part of the art as well as the science that financial planning provides, and that takes help. I don't suggest people do that on their own. I think you need a guide to help you walk through those illustrations to create those illustrations, frankly, to help you even identify and define what those goals look like, because you've never really spent any time thinking about them, I suppose, from the way that I would think of them as a financial advisor. And then, you're not left up to your own devices to figure out how to get there. It's really the financial advisor's job to figure out, based on your current resources, how you're going to get from this point to that point.
Excellent insight, Jim. One of the concerns I had was looking at how much money I spent on treatment, whether it be for prescription, co-pays, taking care of additional expenses that were unplanned during my bout with cancer. Can you elaborate a little bit on how to move forward in a situation like that?
Totally understand your concern about if you've spent a bunch of money on your care and now are wondering how has that affected all the rest of the goals that I've got for myself again and for my family. Well, here again, there are things that I'm used to. I've been doing this 27 years, so there are things that I'm aware of, things that I can, tools and techniques that I can employ on behalf of someone that I feel, may not be rocket science, but are proven techniques to make you use your money as wisely as possible. I mean, just simple things like debt consolidation and having the right kind of mortgage and not paying too much in interest for it and so on, and ways that we can free up cash flow. I see this all the time. Every day I probably talk to somebody who's maybe lost their job or is looking for their next opportunity, and they're concerned about how they're going to be able to make ends meet and so on. And there's so many ways for us to free up cash flow through tax savings, insurance savings, debt consolidation, or maybe again debt savings through changing, getting a lower rate on your mortgage, things like that, or extending the loan duration. Instead of paying it off in 20 years or 15 years, you pay it off in 30 years to free up additional cash flow, so that you can put that cash flow to immediate needs or priorities that you have today, and or toward investments, so that you can build your net worth quicker. So there's efficient ways to do things in all things, and inefficient ways to do it, and that holds true in financial planning and in your financial life. So it's playing out these various scenarios, figuring out what the goals that you have, and then mapping out a course, a plan of action that's going to take you from the current point that you're in to the point that you want to be. And it may be, it may take more time than you want it to take, but that's something that at least in advance how long it's going to take, or what you need to do today in order to get on track to that plan.